Hello and welcome. You have tuned in to Buy Now, Sell Now on ET Now. This is Mansi Dave and with me is my colleague from Delhi studio, Kanishka Sarkar. And viewers, we are celebrating ET Now's 16th anniversary celebration. And the channel has always given its best to encourage investment across asset classes by giving you all the important updates. We are pleased by the continued...
Moving on, we are also joined by Ajit Mishra, the SVP Research at Religare Broking. Both Kunal and Ajit will help us answer all your queries when it comes to stocks now. Kunal, now coming to you. We have a viewer who's holding shares of Canara Bank. Her average price is 116 rupees. So she wants to know if she should average out at this time or should she continue to hold and what's the target for the short term?
Dividend of 4 or 5 rupees approximately per share. So I'm not sure whether your price is adjusted to that. But irrespective, I think at current levels of 105, 6 or 6, 7 where the stock is trading right now, I think it's a good zone where you should look to average further. You know, it's a top quality name. The stock has done reasonably well from the March 2025 bottoms. I remember I think the stock was almost at 82 or 83 rupees. Price adjusted, in terms of the support. And from there, the stock has moved more than 20-25% to move up to that 115-120 range. So I think Canara Bank is a fantastic chart from the PSU banking name. If you're holding on to it with a time frame of medium to long term also, very good time for you to average.
Okay, very good time for you to average. Banks and financials already in favor and Canara Bank almost showing signs of around 3% gains in the trading session today. Let's welcome Ajit Mishra, SVP Research Religare Broking on the panel as well. Ajit, good morning. Thank you so much for giving your time to ET Now. And as we speak, Nifty has crossed 25,000 level and Bank Nifty is trading above 56,000. Good Friday session as we see. What's your stance on the index at present?
Yeah, good morning, Mansi. So yes, Mansi, so if you recall that the last 2 weeks, Fridays are very important. Means 2 weeks ago on Friday, the RBI announced, measures related to the rate cuts and CRR cut. So that pushed the markets higher. But last Friday, it was almost the reverse to what we saw. Again, it's a trending day today, and we hope that, it holds. Means we are crossing 25,000 barrier once again. So as of now, it seems like that the consolidation is still on when it comes to the index. Because broadly, if you see that 25,200, 24,500 is something that Nifty has been hovering in for the last 5 weeks. And banking, which was earlier acting as a key support, has also turned sideways now. So means 56,000 was the critical hurdle, and now since we are holding and surpassing that zone, definitely there is a possibility that market may continue to see further positive momentum. But having said that, one should wait and see how situation pans out on the closing basis. And let's say 25,200, that's basically a critical juncture to break and sustain. Then we'll have the next directional move, which could help the index to inch toward 25,600 to 25,800.
All right, thank you, Ajit, for that view. Now, talking about the stocks that our viewers have raised queries about. Now, Ashish Bhushan, he's written to us from Gurgaon. He has 6,000 shares of Union Bank at a price of 121. So, if you could help us understand, his time horizon is 6 to 12 months. He wants to know what is the possible target going forward.
Yeah, certainly. So, the PSU basket, especially if you see the last leg of the recovery or, surge in the banking space, PSU were among the top performers, especially the stock like Union Bank, Bank of Baroda, Indian Bank, they were leading from the front. So, Union Bank, after retesting its previous swing highs around 160-62 area, we have seen a marginal drift. But still holding above its short-term averages, which indicates that momentum is still intact. So definitely you should stay put. Now 125 to 130 is a zone basically where we have multiple supports. So with a time horizon of let's say 6 months, one can wait for 130 as a closing stop loss, and positionally he can wait for 195 to 210 as a positional target area.
On a positional basis, 195 is the first target and the second would be 210, and the stock is trading at day's high with a 4% upsurge at present around 145. Moving on to the next question, and a lot of best wishes flowing in for ET now, and one
The large caps and mid caps mix that Kunal has picked out for us. But moving on now, Ajit, coming to you, we have a viewer, S. Kumar, writing to us from Chennai. They would like to know your perspective on HDFC Bank. Or if you could also give us a target for the next 6 months. They've been holding 100 shares for the last 10 years.
Okay, so that's great. Means, if you talk about the private banking majors, of late we were seeing underperformance in some of these names. But, talk about HDFC Bank, it's been a consistent performer since has been holding for 10 years. So I hope that he's planning to maintain this ahead also. It's been almost like, 5 years of, consolidation, though the stock is trading at the record highs. But if you see that from 2021 highs in the month of December to till date, we have not seen any meaningful returns. So we believe that this kind of underperformance is over, and usually we see that this stock after, such a prolonged consolidation phase witnesses the next leg of the up move. So after this, pause, we believe that probably 2300, 2400 is something that the stock might test in the next leg of the up move. Now, this 1700 to 1800 is a very strong base for this stock. So definitely it should stay put, and one can in fact add more at current levels.
Consider adding more of HDFC Bank at current levels. Steady margins and asset quality as well as loan growth scenarios are something which one should keep an eye on when we talk about banks and financials, and in particular majors like HDFC Bank. On this note,
Queries, do keep sharing them on the number that will flash on your screen shortly. But let's get going with the queries now. Ajit, coming to you, we have a viewer, Jayesh, who's written to us from Mumbai. They want to know if they should continue to add more shares of NTPC. They currently have 500 shares, or should they average out at this point?
So, Kanishka, they should wait, because if you see that it's been almost a month now that the stock has been, underperforming, means the kind of price pressure that we are seeing, the stock is trading below all the major averages. So if the view is, let's say, short term, definitely it's not a good time. We should wait for a decisive breakup of 350 mark that coincides with the long-term averages. So once we see that, then probably we can see the fresh momentum, which could help the stock to inch towards previous swing high, that is around 375, 380 area. So if the view is short term, definitely you should avoid.
the view is short term, you can consider avoiding, but on a long term or a positional basis, consider waiting because the stock has seen an underperformance of almost a month, and so we can see an upside or a momentum at least in the stock. The next question is
L&T, Persistent Systems, and also the entire Nifty IT index. But moving on now, Ajit, I'll come to you. We have a viewer, Nikhil Sharma, who's written to us from Mumbai. He says he's an intraday trader and also a short-term and long-term investor. Now he has 100 shares of ITC Hotels at a price of 216, with a target that he's predicting at 237 rupees. Currently, he's in loss. He wants to know when would be the right time to exit the stock, or is it better to hold on, or will it be worth buying again, or should he shift to Indian Hotels?
Right. So multiple queries. So first, let's see how ITC Hotel is positioned. So we have very limited data because it's a recent listing, and but as per the available information, it shows that the trend is positive. There is no doubt about it. It's just that after this recent up move, we are seeing consolidation for almost a month now. So broadly, the range is 205 to 220 on the closing basis. So in my opinion, he should definitely stick to his existing position, because we are very closer to the lower band. 204, 205 is the support area. So with that as a stop loss, if the view is short term, definitely he should stay put. Is Indian Hotel better than ITC at current levels? I feel that as of now, both are indicating consolidation. So for Indian Hotel, one should wait for a close above, let's say, 785 to 790 on the closing basis. So in case if it manages to cross that and ITC remains the place where it is, definitely you can stay, switch to Indian Hotel, but otherwise you can stay put with ITC.
Stay put with ITC is what the view is coming in. Coming on to the next question, Rishabh writes to us from Mumbai. His question is on IRFC. He has got 700 shares at 191 a piece. And if we talk about the railway counters, Ajit, I'll take this question again from you. Despite larger order books, we have seen railway stocks not showing real good momentum. And particularly if we talk about IRFC, in the past few days, as we see, the stock at present is trading as around 135 with a 4.5% upsurge. But 150 seems to be a stiff resistance which the stock faces. What's your view?
So, Mansi, that's right. In fact, if you see that we were seeing a kind of a thematic move of late, wherein first we saw that the defense counter started doing well, then the move cascaded to the PSU banks and the railways counter. While the momentum continued in the latter part, railways, again, they are slightly on the back foot. And in fact, the stocks which are in the F&O basket, they are witnessing, in fact, more pressure on the higher levels. Or I would rather say it's underperformance that they are currently facing. So for IRFC also, after the reclaiming its major averages, again we are seeing that the stock is witnessing pressure and trading below its short to medium term averages also. So it's likely to consolidate in a range. So in the near term, possibility of further consolidation in the range of 130 to 150 seems high. Since we are very closer to the lower band, and in case if he has existing position, he can maintain with 130 as a stop loss and use recovery to reduce its position around 145 to 150 levels.
Those are the levels to track for IRFC. Thank you, Ajit, for that view. Now,
Head for signed, and if you have existing position, consider maintaining it. The stock has constantly reduced debt and has been maintaining a healthy dividend payout ratio as well. So a good mid-cap player in itself. Another question coming in from Jai Lakshmi. They're writing from Hyderabad. Ajit, I'll take this question from you. Asian Paints is the stock which the viewer is holding 35 shares at 3,000 apiece. The question is whether one should consider holding it, averaging it, or exiting the stock. Now, talking about Asian Paints and particularly paint stocks, of course, the crude-related factor is also playing, and in particular for Asian Paints, the stock has been underperforming for quite some time. Even today, if we see 2277 is the level in the range of around 2,263 to around 2,800 is what the range the stock keeps on chasing. What's your view?
Right, Mansi. In fact, if you see that, from the 2021 highs to till date, means there was a broader range, 2,600, 3,400, followed by a breakdown, in the month of November 2024. And since then, we are seeing that the stock has been struggling to cross even its short-term averages. So we believe that this kind of price pattern usually attracts, prolonged underperformance, and that is what we are seeing within the sector also. Means of late we were seeing that Berger Paint was doing well, while the Asian Paint was still struggling for any meaningful comeback. Currently, the stock is trading closer to its previous swing lows. So the downside all seems capped if the view is, let's say, for short term. But since she has been holding it from roughly around 3,000 levels, I doubt that we can see such meaningful recovery, at least in the near future, or maybe in short to medium term also. So the good idea is to take the losses and switch to the sectors and themes which are doing well. So probably private banking majors like HDFC, something that she can consider, or Axis Bank, or maybe L&T, from the large cap basket.
all right. Thank you, Ajit, for that view on Asian Paints. But with that, it's time to take a very short break. Thank you so much, Kunal and Ajit, for joining us today and helping our viewers answering all their stock-related queries. Thank you so much for joining.